First is trust.
Yeah.
And that's been one of the challenges in the fintech industry is how do you establish trust with people when you're an unknown brand and it's people's money? I mean, it's the most sacred thing. And so establishing trust first is most important. And then is that hardest? It may be, but then I think even as you grow, what gets really hard is scaling. We've had the wonderful fortune of growing really fast and making sure that we automate and make it a great experience for the 12 million member and the 1 million member and all along the way. And if you look back, I would say the thing that can be hardest as you're growing is making sure you're investing in scale and automating from day one.
Welcome, everyone, to Humans of FinTech, the show where we get real about the people building the future of finance. I'm your host, Nicole Casperson, and today's guest is Kelli Keough, EVP Group Business Unit Leader for Spend, Invest, Protect, and Save at SoFi, where she leads the businesses that shape how millions of people reach their financial goals. Kelli didn't start her career in finance. She started it in psychology, studying how people think, decide, and behave. And that foundation became her edge as she moved from academia into financial services, first at Schwab, then JP Morgan, and now as an executive shaping one of the most influential consumer fintech companies in the world. Founded in 2011, in the aftermath of the financial crisis, SoFi was created as a direct response to the burden of high-interest student debt and the rigidities of traditional banking. Its mission has always been bigger than products, to help people achieve financial independence so they can realize their ambitions. And today, SoFi serves more than 12 million members, operates as a full-scale digital financial services platform, and is the NBA's official bank and the namesake of SoFi Stadium in Los Angeles. And in this episode, we talk about what it really takes to build a winning consumer fintech brand at scale. Plus, we explore how consumer behavior is changing under economic pressure, how AI is reshaping financial decision-making, and why the next era of fintech will belong to companies that understand people as deeply as they understand systems. Kelli, welcome to Humans of FinTech.
Thank you so much for having me. It's good to see you again.
Yeah, it's so good to see you. Now, you started your career studying human behavior, which is so fascinating. How does your background in psychology shape the way you think about money, risk, and decision-making today?
Well, the core, everything we're doing is about the humans. So Humans of FinTech, really what we're doing is serving people. And so I believe that having a psychology background really helps me think about and understand people's ideas, behaviors, what influences their decision making. And importantly, money is a very emotional aspect. So when you combine the emotion plus the behavior and then try to figure out how do you quantify that so that you can create offerings that serve them well, those are actually all psychology questions. And I feel like I've been able to leverage that throughout my career.
Yeah, I love that. And it's fascinating to move from academia to consulting and then into fintech. Before fintech was even really a category, what did you see early that pulled you into financial services and made you want to stay?
Yeah, so I have been in this space for quite a while. In fact, even in the late 90s, I did some consulting for a company that was creating collaborative financial planning experiences long before its time. And what was amazing then was thinking about how do people work with technology and financial services. And that really gave me then, I would say, kind of a springboard as I went to Schwab and I went to JP Morgan. And the theme that really pulls through all of the places and really at SoFi is putting people at the center, designing experiences for people. And so what brought me into fintech before it was even fintech was thinking about how do we help people with their money and keeping really focused on them. And then I would say, why did I stay in fintech? My parents were educators and they saved and were super diligent, but they never invested a dime in their whole life. And I think about what would have been for them in their retirement if they had had the opportunity to invest. And so the thing that brought me in was the ability to use my psychology, really pull that through with all the companies that I've been at. But then more importantly is then being able to bring the power of saving and investing to more people like my parents didn't have.
Yeah, no, that's it. I think that's something that a lot of us that work in the fintech space can relate to, right? Like, I know I've had to do some of my own unlearning of my money mindset or money behaviors that you learn from your parents, but at the end of the day, we've had like a financial literacy crisis in America for a long time, right? And so it's not abnormal for our parents to not invest or, not understand savings or not understand these pieces, especially when things were, I guess, more simple back then. From your vantage point, what is one thing that financial institutions still fundamentally misunderstand about how people actually behave with money today?
Well, I think we like to think in financial services by product silo.
Yeah.
So we think
oh my gosh.
checking, we think savings, we think investing. But that's actually not the way that people think. So if I think about most of our customers and members at SoFi, they think about saving, but saving is a verb, not a noun. So that's what they do. And it might go some into their checking account, some into what's a savings account, some into investments, some might be in crypto. That in somebody's mind might actually all be savings. And so what's important for us, I think, is to think about how people think end to end through a journey and don't think in these product silos. And that's something that I just love about SoFi is we really try to think about bringing all of these products together. And if you notice, my title is Spend, Invest, Protect, and Save. Those are verbs. That's what people do. It's not about seeking individual products. So I think that's one thing we've gotten wrong. And we need to really flip that on its head and think about holistic journeys and putting all those together seamlessly.
Right. Well, we had the era of where financial services was bundled and then unbundled, and now we're in the rebundling again, right? Especially with consumer fintech, where folks now want things all in one place. I mean, that must have been. It makes sense that was such a key part of what would make you excited to join fintech from the traditional financial services world, because of that. Keeping things kind of siloed, or the planning side of things not being connected to the savings or the investing. We're living through this period of just real economic anxiety, I think, right now. So much so that people are, calling 2026 the new 2016 as I think a coping mechanism for like a simpler time in life, and so, but there's affordability pressures and rate fatigue and just general uncertainty. What are some of the shifts in consumer behavior that you're seeing right now that feel meaningfully different from past cycles?
I know there's a lot of maybe what you classified as angst, but underneath it, people are engaged. They care, and they're actively trying to do the best thing that they can for their money. If things are more expensive, then you have to be even smarter. So we do see people, they are sensitive to rate. They're focused on how do I save more. At SoFi, we've been growing our member base 34% in Q3 last year. And we continue to have more people come to us. We help people save over $100 million in interest in one quarter in just our student lending. People care about maximizing their dollars, and they're actively doing that. If we look at, for example, a survey from NerdWallet, over the next year, we see that Americans are looking at taking action by 46% saying they want to set up an emergency savings account. 30% are planning to pay down debt. They're actively managing their money in a variety of different ways. And it's not just about being, we'll say, more conservative. We also see that 57% said they're interested in doing something slightly riskier, potentially even, for example, investing in crypto. And so you see both sides of the equation. Most importantly is we're not seeing fatigue, we're actually seeing people be engaged.
Yeah. Okay. So I really like that perspective. And one, as a fintech optimist and a consumer fintech optimist myself and a SoFi user, just disclaimer. But I understand that kind of entirely. It's something that in the last few years, even just from the reporting side, there's been a lot of fun in the industry headlines of like, oh, consumer fintech is dead, or like consumer fintech is something that no one can figure this out. Meanwhile, I'm like, doesn't SoFi have a stadium? Clearly someone's figured this out. Talk to me about those unit economics, because clearly, based on what you're saying, the consumer is more engaged with understanding money than ever before, largely because we have to, right? Mm-hmm. Because especially when the usual framework of like, go to school, get a job, buy a house, pay down debt, it doesn't work necessarily for everyone. It works for some, right? Mm-hmm. But things are just generally different, and there's different and like more diversity in terms of the path to wealth, right? We have the rise in entrepreneurship and all of that. But anyways, so many factors that you're having to put all together as you create this massive and scalable consumer business. But rewinding back to the unit economics, let's talk about some of that, because that's always the thing I hear the most from folks that are like, let's just invest in another B2B SaaS product. Like the economics on consumer fintech is just too hard. Help us like demystify that a little bit.
Yeah, sure. So it's, first of all, through my training across all these companies, one of the biggest lessons I learned was if you do right by the customer, the economics follow. Now, you have to obsess about them with discipline. So that's the second part I would add, and that is something that SoFi does so well. We know and pay a lot of attention to of course, driving demand, but then how do you convert people? How do you have appropriate unit economics that each and every product, you are very thoughtful about what your profit margin really is. And then what you are able to do is, as a business starts to scale, and it needs to scale profitably, you then can take returns from that business to invest in what we consider like a next Series A or the next line of business. And so part of our whole diversified portfolio, we obsess about unit economics at the product level, but we also then look at how across the portfolio of products we're offering, we can invest and keep moving on and continue to innovate that way. And so that's been a really important part of the flywheel, to not only create something that's sustainable, but that's something that can continue to grow as well.
Right. Well, and so SoFi specifically, right, the founders started with student loans, right?
Yes.
Like how challenging it is. And I've actually seen some great early stage founders these days also tackling that problem in different nuanced ways and in more, in B2B ways. But
the other important part of the unit economics that many people talk about is the cost of acquiring a customer into a fintech business is often incredibly high. And that's one of the biggest barriers. They may create an incredible product, solve a need for people, but getting the word out can be very expensive. And so we have an amazing brand team, and we also have a number of products that people want to have, and that is also the key to great unit economics, is reducing your cost of acquisition. And so the way that we're able to do that is by when people take more than one of our products. So 40% of our new products that are opened are actually opened by an existing member. Right. And that basically means the cost of acquisition for that next product is zero. It really helps your economics. And that is key of getting that flywheel going, of helping people with a need and then helping them with the next need.
I like this like graduation or like process or waterfall effect or what have you. That means you have to have kind of a lot of different pieces of the flywheel together so that you're grabbing consumers from wherever their needs are. So so started with student loans and then kind of continue to graduate into other areas with SoFi. Is there a place today that you see the most like interest or engagement of where like more consumers are coming in from a certain piece of the flywheel today?
Yeah, well, so our a couple of years ago, we got a national charter to be a nationally chartered bank. And that gave us the opportunity to have a very powerful and compelling checking and savings offering in kind of industry parlance. And what that has done is through our SoFi Money accounts is we've really become the front door of SoFi. And we can now also what we can do is we can market to everybody. because
Right.
our checking and savings offering is meant for everybody. Some lending products actually are more narrow in who they're appropriate for, and it's harder to have a national brand be on NFL TV as we just were this last
Right.
weekend. It's a lot harder to do that if you have narrower products. But checking and savings really changed things for us, being able to speak nationally, and that has really pulled in right now the majority of our new members.
Okay, yeah. I mean, it makes sense. I think a lot of the chatter, what we saw kind of over the years, is consumer fintech taking this niche approach to your point, right? But whether it's right, a checking account for doctors or checking account for this kind of person or whatever, but at the end of the day, we're all kind of, I almost feel like some of us can have more similarities in alignment with like where we are at with our money journey than necessarily like our jobs or identities or certain things. You know what I mean? Like I could be just as aligned in my money journey as a couple that's entrepreneurs running our own business, like me and my partner, as a couple that is just high earners at, a company or whatever, right? Like I think that sometimes is what we're missing from like a community standpoint, is like, how do we get together more in alignment with our money mindsets as humans, as opposed to being like, this bank is for certain kind of people and this bank is for, right? And I think that's what you're getting at in terms of like why SoFi has made these big jumps for having a stadium and being the NBA, like embedding itself into culture is how I see those move.
I would say yes, we have very much tried to embed into culture, but that's because what we're trying to do is bring the story of how we can help people.
Right.
Our kind of strategy is to get your money right. And our CEO, Anthony Noto, often says, one of the things we want to help people with is spend less than they make and invest the rest. That's kind of it. And so you talked about
I like that.
Ubiquitous needs. That's actually a ubiquitous need. And so how do you help people have less debt, manageable debt, spend less, save what they have, and ideally get the power of investment? Underneath that then are a range of products, but those needs are actually pretty common. And so what we're able to do is connect to people through talking about those needs, but then it becomes very specific and personalized. That to me is another part of the journey, is how do you then create Nicole's personalized actions and insights that work for you and are specific to you. And that's where we can also really help people.
Yeah, well, I think that's the next era with agentic AI. I've said it. We'll get to that part at some point, because how could we not? It's 2026 and we're still on AI. Well, now it's evolved even more. Anyway, but before we get into that, I am curious your thoughts. So you do oversee spend, invest, protect, and save, as we talked about, essentially the full consumer financial stack, which is a massive job, given that you're at like the largest consumer fintech and neobank. But SoFi has grown rapidly, like we shared, to more than 12 million members, which is crazy. As you scale, what do you think is harder first? The experience, the economics, or just maintaining the trust that you have with those members? What's the most challenging part and why?
So first is trust.
Yeah.
I think, and that's been one of the challenges in the fintech industry, is how do you establish trust with people when you're an unknown brand and it's people's money? I mean, it's the most sacred thing. And so establishing trust first is most important. And then is that hardest? It may be, but then I think even as you grow, what gets really hard is scaling. We've had the wonderful fortune of growing really fast and making sure that we automate and make it a great experience for the 12 million member and the 1 million member and all along the way. And if you look back, I would say the thing that can be hardest as you're growing is making sure you're investing in scale and automating from day one.
Yeah. Oh, hear that? Sorry, there's my co-founder and creative director staring at me like, we must automate and we must organize. I love it. Hey listeners, I want to take a moment to share some really exciting news. Now, for the first time ever, Humans of Fintech is hosting the premier podcast booth at Fintech Meetup on the showroom floor in Las Vegas. If you don't know what Fintech Meetup is, it is where the fintech industry actually does business. This isn't just another conference. Fintech Meetup brings together leaders from banks, fintechs, credit unions, and investing firms for 50,000 one-to-one meetings designed to drive real partnerships and real ROI. And this year, we're spotlighting the humans behind the headlines. So, in partnership with Fintech Meetup, we are launching a special nomination contest for the Fintech is Femme community. Here is how it works. First, nominate yourself or a colleague to be featured in a live recording of Humans of Fintech on the Fintech Meetup show floor. And all nominees will receive discounted Fintech Meetup tickets. Plus, 2 winners, the nominator and the nominee, will receive free VIP tickets to Fintech Meetup, which is worth so much value. And the selected nominee will also record a live podcast episode with me, Nicole Casperson, and be able to share their stories and insights distributed across the Humans of Fintech network of 100,000 fintech leaders. So if you are ready to step into the spotlight, be sure to nominate now and lock in your spot. There's a link in the description to nominate, but the landing page is fintechmeetup.com/page/winners-circle. And remember, fintech is built by humans, and their stories deserve the mic. So if you're ready to join Fintech Meetup, be sure to nominate, and I'll see you on the show floor in Las Vegas. All right. Let's get back to the episode. You've spoken about in the past kind of 3 fundamentals that guide your work, which is this exceptional member experience, the responsible unit economics, of course, and then just continuous innovation. Could you share an example where all 3 of these fundamentals actually reinforce each other instead of kind of competing? We love to, in our industry, talk about like these forces that don't exist all at once, but they really do.
Right. Like we often say, you can't have good, fast, and cheap all at the same time.
Yeah, right. You can't have innovation and regulation. Oh, no.
Yeah. So I think a great example is our recent relaunch of crypto at SoFi.
Okay, good example.
And if I think through, let's talk through those first unit economics. Mm-hmm. In 2019, we introduced crypto, but had to unfortunately get out of that business once we became a nationally chartered bank under the prior regulatory environment. And so we have now re-entered into it. And the way that we've re-entered it is a little different than we did the first time. We own the infrastructure. It gives us the ability to own the economics and then be able to quickly scale. The second piece of it is the member experience. We focused a ton on making it super easy from day one. And then last but not least, I would say innovation. So a step back, we know that people actually have said 60% when they're surveyed said they would prefer to actually trade crypto at a bank than a non-bank. There's some security that comes from the banking institution. Well, some might say, oh my gosh, how can you innovate when you're a bank? One of the most innovative features of our new crypto offering is that the cash that you have sits in our bank. You open a checking and savings account, the cash sits there, is FDIC insured, earns interest, and then when you need the cash, we automatically transfer it over to you, to your crypto account when you need it. So it's a really innovative solution that actually is only available because we're a bank.
Right.
So I love being able to think about how do we have great unit economics, an amazing member experience, and then innovate while also using our regulatory advantage.
Right, exactly. And I mean, when moving, when the timing is right? Like, stable coins are being talked about more than ever, right? We're finally we're kind of coming out of crypto winter and entering spring, or if you will.
Not today. But
not today. Don't be fooled by how sunny and beautiful it is outside. It's fascinating to be able to kind of move at that speed. And I think that is something that is only, that is specifically unique to a fintech that then became a bank, if you will, right? Like SoFi in that journey. And that was a monumental moment when you got your bank charter, and now you're able to have, that trust. And, especially as we kind of move into AI and agentic AI and agents, I do think that that's this next era we're entering, and that is going to be the fact that you are a bank and needing to stay in the center of that equation is going to be huge in terms of like where SoFi sits and fintech sits in the agentic AI and commerce race, right? If you will. Like it's influencing, and I guess from your seat, thoughts on like the agentic AI commerce race. What do you think is to come in 2026 with that? Like, how is SoFi, from your seat, thinking of this new era?
Yeah, so agentic AI, I think, has incredible potential. But I think it's also incredibly challenging, not only to fintech, but to really any business. And if you go back to the early days of the internet, before kind of the internet was commercialized, we all had software solutions. And you went to, let's say, your software for Quicken, as an example. And that's how you managed your finances. And then as search engines became ubiquitous, you went into those search engines and started looking for, how do I file taxes and things like that, instead of going to look in your TurboTax software. And it pulled people out of these walled gardens that they had been in. So now let's go to where we are with AI. And I think there's a really interesting shift that's happening. We don't know where it's going to go in terms of behaviors because it's happening so fast. But people are going, for example, to their LLMs to do searches on financial topics. It's actually one of the most popular topics for people to search and to get answers. And so the question for us, I think, in our industry is, how do we go to where our consumers are? If they're asking questions in, ChatGPT or Gemini, how do we go there, provide the right data transparency, information, act in their best interest? That's critical for us to continue to have, I would say, to be reliable and respectful. But we also probably want to pull people back for more advanced things that they want to do, complex questions, and then be able to help them on a real personal basis. So that balance of people moving off and then coming back is, I think, unknown in terms of how it's all going to play out.
Right. Because if consumers are increasingly interacting with their money outside of a single app through the AI assistants or search or these other platforms, then you're right. The fundamental question becomes, where does fintech kind of show up and remain relevant in that equation? And there is, I think that feels, of course, like an opportunity, but it feels also just like this big responsibility now that, especially as banks like yours are so massive now and have so many customers and members, like, it almost reminds me of like in 2020 when the TikTok like consumer fintech wave happened, or like what was it called? They were just finfluencers, if you will, right? Or FinTalk or whatever. And I remember being a wealth management reporter at the time and just covering like, we got to get in front of this because everyone was so nervous about financial literacy and the wrong financial education coming out through these platforms. So it's I think it's a similar thing, because the AI chats aren't perfect yet, right? Like they haven't quite totally nailed being able to get everythhere right in terms of like the stats and the facts and all, and the advice, right? So like finding out where our place is in that equation will be interesting this year.
The other side of it is, we also have a responsibility for example, at SoFi in the experience, is to leverage AI to help our members do their very best. And that really is the next opportunity for us. There's lots of ways to try to figure out how to pay down debt. You can talk to people, but now people are going to literally just type that question into a chatbot. And we want to be able to give not only information, but insights that are unique to you, that are personalized, and that help you with the right next action. And if we do that, I would say at SoFi, we have tons of governance, really focused on making sure the data are right, the answers are accurate. And so I would say that's an opportunity for us to be that trusted I won't say advisor, but the trusted guidance. Kind of guidance that people are looking for.
Well, and wanting to, I've been writing about it for years, and I have had people be like, Nicole, I think you're wrong. And I'm like, I don't know, this data says otherwise. But like, consumers more and more are wanting financial education and content from the apps that they use and trust, right? I've been a part of that. Like I have done a workshop for SoFi with one of your financial planners and, talked through my journey and talked through my story with SoFi. I wrote about it in my book as well, which I have to send you a copy.
I've actually listened to it. So
we're
good.
Gosh. Hear that on the record? Yeah. Anyways, so she's heard this voice for 9 hours, which is how long it took me to record that thing. I love it. And I hope they did a good job editing it. But in that, and then of the story of my relationship with SoFi, other than working on a few campaigns, but also just I was using the SoFi savings account, the one that you're in charge of now. And I was through my aggressive saving and, high yield interest and what I was able to kind of do over just 2 years. While also paying down my debt with the SoFi personal loan, all of those factors kind of came together, and investing, that I was able to, leave my job and start Fintech is Fem, and start this business that I've been doing. And so when your tagline is, helping a consumer reach financial independence so they can realize their ambitions, I do feel, not to get too commercial here, but I do feel a little like
you are it.
I experienced that. I experienced that
fully. Thank you for your business. And thank you to all of the folks at SoFi who've created those experiences because they're incredibly powerful. You talked about how you saved in the vaults. And that is a simple concept, but it's an electronic envelope that helps you take your savings and label it and put money into these essentially electronic envelopes.
Well, and then to not even have to think about it, right? Yeah. For example, so that's so funny. So I have a good friend who, you've now listened to my book, so you know everything. All my materials done. Anyways, no, but so then I had mentioned, maybe you don't remember this part, but I mentioned a friend of mine who's also, he's a behavioral finance psychologist specifically, and his name, my friend, Dr. Daniel Crosby. Peace, shout out. But he's written a number of books, a number of New York Times bestsellers, wrote a great testimonial for mine as well. But he talks about those vaults. And that was before I even knew about SoFi's vaults. So I heard him talk about how if you just label a vault in your banking app with a certain thing that you're excited about, so let's say it's your wedding or starting your own business because you hate your job, whatever that is, that you are there's a much higher chance that you'll actually reach those goals just from labeling it, yes. And just having that automation and labeling it. And I was like, wow, I should really see if this thing works. And boom, here we are. And it worked.
That goes back to the psychology because it's called a vault, which means it's locked away.
Right.
And so that kind of perceptually means it's not just money that you spend on a daily basis. And so those little things help people make a difference and they can help change behavior.
Yeah, no, absolutely. I mean, kind of going back to our unit economics conversation a bit, I'm wondering as some smaller consumer fintechs pop up, to me it's seeming like it makes almost more sense to just partner with larger institutions like yourself. How do you think about that?
We definitely partner with quite a number of institutions, primarily in spaces where we are not, I would say, it's not one of our core products and features at this point. And so I'll give an example. We partner in the small business space with a number of different providers in terms of lending, business checking, business credit card, business insurance, and so forth. And part of it, our brand pulls in so many people, and many of our members, like you, also have a small business. And so they come to us and we want to be able to help them, but we may not have those products directly yet. Right. And so we work with partners to fill those needs. Okay. So we do a lot of that. And I do think that is part of the future. the brand that we have built is incredible and it resonates with people. And so the more that we can work to fulfill people's ambitions through a variety of different ways, I think we'd love to.
Yeah, well, and I think that the white space is still so massive, and there's still so much work to be done. Even, 2026 may be the new 2016, but there's still so much work to do from a fintech perspective and kind of getting consumers' finances right. All right, a few last questions for you before we get into rapid fire. Now, every major technology shift tends to break old moats, right? What moats do you believe will matter most in fintech going forward? Brand, trust, data, distribution, or something else entirely?
Well, we used to think that there was a regulatory moat. And so an example is SoFi was one of the last ones in the prior kind of regulatory kind of era to get a national bank charter. And that was considered a moat to be able to have that. But, the regulatory environment has changed, and so many institutions now are seeking a range of different charters. And so that is something then you can't hang your hat on. You really need to think, I would say, innovatively about how do you leverage kind of the fintech and the bank side. Some would say that balance sheet is a moat. You think about the label Fortress balance sheet and it being a moat. But you also mentioned the ability to partner with other institutions. And so there's still ways to provide services, for example, lending to people, even if you don't have necessarily the balance sheet, but you have great partnerships in order to do it. And so those are things that I think have started to be less of moats, but I think of them as enablers. And when especially you think about the combination of them. So you think about the regulatory environment, the innovation, and having access to capital. When those things start to come together, you can, I think, really get it accelerates things.
Right. Yeah. And you're able to do more, and you're able to do things, at the right time and at the right moment, like expand into the crypto offering. This flywheel is all making a ton of sense. So, I mean, and what's also just crazy to think about though, is like how SoFi has become the big fish, right? Like the big fish who's able to do these partnerships and kind of like, and move about the space. Just so cool. A few more questions for you. So leadership perspective, you've led through startups and global banks and household names in our industry, and now obviously at one of the most scaled consumer fintech platforms. What is a leadership belief or mantra that stayed with you through every chapter?
So the one that really resonates to me always is Schwab's strategy is through clients' eyes. And that's it.
Just that.
And that to me, the philosophy was if you approach a problem, if you build a business by meeting your clients' needs, the rest follows. And that is something that, I have tried in every instance of what I've done to really bring to life. And as a former psychologist, that also really resonates to me because it puts the human at the center. And that's also why I was so excited to join SoFi. Yeah. Because for us, the member is at the center of everything we do.
I appreciate that also about just consumer fintech in general, because you are thinking a bit more of the end human. Because even in the B2B space, no matter what, there's always an end user at some point there. But anyway, that's a different podcast. When you think about today's generation of fintech leaders, what do you hope they fiercely protect, and what do you hope they're brave enough to rebuild?
I hope they fiercely protect the trust that they need to build with the consumer. It's sacred. It's people's money. And so I am challenged when I hear people talk about, well, let's just throw something against the wall and see if it sticks.
It's not my favorite thing.
Not when it's people's money. And so that's one thing that if I think about what do we need to protect in our industry, it's doing right by people and treating their money as if it's our own. And then what would I hope that we can make enormous strides on and break molds? It's using technology to give advice And, I think there's enormous opportunity, for example, to use what we're doing in AI to really bring actual investment advice to a much broader range of people. It becomes more accessible. People who are worried and don't feel like the investing is for them are likely to engage with a chatbot or with an LLM. And so how do we break down the barriers to providing actual advice for them? I am hopeful that we get there because we need to. That's just on the cusp for us, I think.
No, I'm with you. And, when you've been in the wealth management space for as long as you have, or covering it for the time I have, I'm with you there. I'm like the yearning. 2026 is also like a big yearning year. 2025 was, right? So like I'm the yearning to have, to do right by people and with their money, and to feel it as if it's your own, is major. And I think I am hopeful we'll continue to see more of that. Now, Kelli, are you ready for some rapid fire questions to close us out? Okay, so for these are just the first thing that comes to mind. Are you a coffee or a tea person?
I have green tea right here, but my first drink in the day is a cappuccino with oat milk, and then I switch to tea, and I just love tea. So I will drink it all day.
I know. I love a green tea. I will, I could try to switch out after my third cup of coffee. But I like your style. First app you check every morning.
Unfortunately, like all of us, I would say it's the notifications more so. It's across the Slack, it's across email. And so what are the notifications of what do I need to pay attention to? In my better moments, I would say the next one is Peloton, and I'll try to work out or do yoga in the morning, and that is a much calmer way to start the day. And then maybe one of the ones on the train in the morning is Ordle. So my kids turn me on, and we have a competition. So yeah.
Okay. Oh my gosh, I love that. It's like a way to engage and play with their kids as you're commuting to work. Like, bye, love you. Let's play Wordle. Oh my gosh, love it. As a trained psychologist, what's one money behavior most people misunderstand about themselves?
It's not as hard as we make it. So I know money's really hard. It is. It's emotional. We don't have enough. But the answers that we come up with then in terms of what you need to do are not that hard. It's put money in a vault, save it. If you want to invest and start investing, broad-based ETFs can be an amazing way to get exposure to the market without having to know too much. So to me, it's not as hard as we make it.
Yeah, gosh, I really, really like that a lot. So for any of the other, folks listening to this with any money trauma, just remember, it is not as hard as we make it. I like that. I'm keeping that one for me. All right. Thank you. Sometimes these questions happen to be for me, as if I know myself and my audience so well. So the best leadership advice you've ever received?
I had an amazing mentor I worked with at a couple companies, and I was early in my management and leadership days. And he said to me, there's a lot of different ways to get to the same outcome. And that made me, I think about that a lot in terms of being generous, open to the creativity that people will bring to solving. But what you need to do as a leader is set the outcome and then open the door for people to solve things their way.
So well said. So well said. One word to describe the future of consumer fintech.
Limitless.
Unlimited. Okay. A money habit you're genuinely proud of.
I am proud of, my parents were savers, as I've said. And I would say the two things that I'm most proud of, my daughter is a huge thrifter, will not buy anything from retail, and we do that together. Love it. And my son is just starting a new job, and the very first thing he did when he figured out what his salary was going to be, create a budget that started with maxing out his 401k.
All right.
So I am totally proud of those two actions.
All right. Yeah. Yes. Okay. Goals for my future kids. Sounds good. It's the least I could do, right? Working in fintech. A belief about money or success you held at 25 that you've completely let go of.
Spending money is not bad.
Oh,
my parents were so frugal, and it hurt them to spend anything. And that's how they saved. But I also realize that we work very hard, and there's a lot of guilt you can have when you spend. And so letting go of that can be really important.
Exactly. Buy that latte. Enjoy. We work hard. What else is this money for? That's what I told my mother about my overly priced wedding. All right. The most overused word in fintech right now.
Rails.
Okay, we'll just land on that. Let that one land. Finish. That's, yeah, if you know, you know. Finish this sentence. Fintech works best when it remembers
people's ambitions. Yes.
One trust building move every fintech startup should make earlier than they think.
Automate and scale. Yes.
You said it. All right. Last question for you, Kelly. Success in 3 words.
I'm going to say 3 things.
Okay.
Okay.
Deal.
So I think success is when somebody says, I love, fill in the brand. I love SoFi. Another is success is when somebody says, I have my money with you. And then last but not least is when success is when somebody says, you helped me, like your vault story.
Wow. This all happened in this show. It's why you came here. You're like, I just wanted to check in on how my success is doing.
Yes,
Let me have an interview with
yes.
Nicole. All right. I love it. Well, Kelli Keough, thank you so much for joining us and sharing more about SoFi and the journey and your psychology background. I'm so interested in it. I should introduce you to my editor. You should write a book.
No.
I mean, look, I'm just saying. Well, just add it to your list.
Okay.
Add it to your list of successes.
There you go.
And then we'll revisit.
Okay.
And then I like the idea. Anyway, but thank you so much, Kelli, for joining us.
Thank you.
Thank you so much for tuning in to this episode of Humans of FinTech. If you loved this and want to hear more from leaders across the fintech industry, be sure to subscribe to our YouTube channel. That is FinTech is Femme. And be sure to sign up for the FinTech is Femme newsletter, which you can do at fintechisfemme.co. See you next time.